wanted to transition a little bit more back to what I think is a unique strength you have, which is you kind of have different 2 feet in different worlds. You're in the stock investing world. You've been doing that for years. You're in the real estate world. And so I just want to ask a general question about how you see the difference between stock investing and real estate investing. And you could just use your own personal situation. You're a growth investor. You're trying to build wealth. What are the strengths and weaknesses comparatively? And how do you see how those fit into an overall strategy?
So I was talking, like I said, I was talking to Matt Faircloth not too long ago, and he quoted it almost perfectly. And so I'm going to steal his quote, but he said, the great part about stocks is that they're easy to get into. The bad part about stocks is they're easy to get out of. And for real estate, it's the exact opposite. The bad thing is that it's a little bit hard to get into. You can do it and it's definitely possible, but it's a little bit harder to get into. There's a little bit more resistance than stocks. And the good part is that you can't get out that easy. And I think that's a big thing, the biggest difference between the two. And the reason that is because if anybody has studied behavioral psychology or behavioral finance, it's the hardest thing about stock investing. The analysis is harder than real estate, but it's doable. And, understanding companies, things like that, fundamentally it's possible, but the psychology in managing your emotions, that's the hardest part. And so with stocks, you just log on in Fidelity or Vanguard and click a button and you can sell your entire portfolio in 5 minutes. Which is not, very dangerous. And it's not the way you want to invest. Right. And so with real estate, you can't do that. Unless you're getting a full cash offer or a cash sale, you're probably not going to sell your property in 30 to 60 days. So you can't really sell it on emotion. And I think that's a huge difference between the two and a benefit and a negative for both of them.
I love that. Yeah. You often hear the negative of real estate is lack of liquidity, and you're just turning that on this head and saying that no, from behavioral psychology standpoint, that's a positive.
I think it's a positive. Yeah, I do.
Yeah, I agree. How do you, in terms of capital allocation? So if I'm a person who, likes real estate, I like the benefits of it, I like the income. Should you be investing an equal amount? I know we're not giving investment advice to people, but like if I'm looking at those comparative advantages, how do you see diversification? Like, do you think it's a smart thing to do both? Do you think there's one part of your life you do one and move into the other?
So definitely, like you said, not financial advice, but I think portfolio allocation and diversification are different. And so the reason I say that is because I don't really diversify too much. I run a very concentrated portfolio, both in stocks and real estate. I'm okay with that. I think you can get better returns by having less diversification. And there's scientific studies you could argue either way. But for me personally, I'm only 25. I'm okay with a lack of diversification. So in my stock portfolio, I'm very concentrated and same in real estate. But now in terms of portfolio allocation, and so that's how you split your money, whether it's stocks or real estate, I've changed a lot over the years because obviously I was a stock investor before. That's where all my money would go. But now all of my corporate job savings, so the automatic savings, go straight in my 401k that I set basically to the match of my employer. And that all goes into a 401k that goes into stocks and ETFs. And I never will touch that. And that will stay there forever. But anything that I save outside of that goes all into real estate. So anything outside of my retirement accounts goes directly into real estate. And that's it's simple. Maybe it's not the most optimal, but it works well for me. And I think it's a good strategy. And that's one of the things I try to do. One of the things I think that you do as well, and I like that I do on my podcast, is that I talk about it's not stocks or real estate it's stocks and real estate, not stocks or real estate. Yep. And I think there's a lot of real estate podcasts out there that kind of shame stocks. And I don't think that's necessarily the right way to go. I think it's both, not one or the other.
Well said. And I really like that delineation between your retirement account investing and your outside your retirement account investing. It has a lot of benefits. Not only is it the simplicity, I'm kind of moving that way as well, where most of my wife and I are 401k or Roth IRA kind of investments are just put them in an index fund. Don't look at it. Just lock the door and move on, because I just got so much going on outside of there. And I have done some real estate investing, self-directed IRA kind of investing in my retirement account as well. So I do dabble in that, but the longer I've been doing this, the more I really enjoy the simplicity of that kind of approach. But then on the opposite end, I'm very into the weeds. Like today, I'm going and looking at a property where a tenant moved out. We got to decide, punch list with my property manager to figure out things, so I'm in the weeds on some stuff and I'm completely passive on the others. And I like that. I like the that approach, because real estate lends itself to a value add. You can add a lot of value. 1 hour of your time might make yourself $5,000, and then the additional benefit for those who are interested in retiring early and achieving financial independence is that real estate can allow you to have some of that income and some of that wealth that you can access 5 years from now. If you're 25 years old and you want it when you're 30, you can get it out of your real estate. Whereas the 401k and that stuff, although there are strategies to get it out early, you got to wait until you're 59 and a half to not pay penalties on it. So that is, your strategy makes a lot of sense to me to have that split. If you can afford to save that much money and do that, which is an important part of the equation.
Yeah, that's exactly. The biggest thing for me is the simplicity. I have a lot going on, you mentioned, and I've been taking a big liking to simplicity lately, and I've been trying to simplify my life as much as I can, and that's just one way that I decided to do it.
Hope you enjoyed that video clip of my interview with Robert Leonard.
Thanks for watching. Make sure to subscribe and hit that notification bell so you don't miss out on our next podcast episode and new investing resources. What are your takeaways and thoughts about this discussion? Let us know in the comments section below.